Welcome to your Daily 5. I am today's host, Bruce Fraser. Thank you for being here. Today's topic, Wyckoff Stock Market Update. Original broadcast July 18th, recorded over the weekend prior. And the announcement I'd like to make very briefly is we are conducting a scanning workshop at this time. Scan efficiently, look less, see more. There is something here for everybody, from beginning scanners to advanced. Great technique. Johnny's scan is amazing. And so join us, develop your scanning skills, become a more efficient scanner, see better ideas more efficiently. It's a phenomenal topic. The next two sessions you can attend live. They'll all be recorded. Catch up by watching the 714 episode and receive the PDF also. WyckoffAnalytics.com to sign up. Okay, power charting last Friday. Will the bear rage in the new quarter? Go check that out. Actually, this is an extension of that power charting in this Your Daily 5 today. And I didn't get a chance to talk about the stock market in that episode. So this is what we're going to do right now. Here is a chart of the S&P 500. It is a daily chart, vertical chart. We've been documenting this distributional structure since last year. I think we've done a fine job. I think Wyckoff has served us so well in this incredible environment with really a very difficult first half of 2022. Now, interesting things that have happened. We'll talk more about these as we go through some of the other slides, but oversold condition here. We are at the end of another quarter. We had said in May, June, expect a low, nesting into the end of the second quarter because of the severe nature of the decline. Then watch for a cause to be built in the new quarter, and that would constitute a test and some kind of a process of building either a base, an accumulation, or a distribution for another decline. This could take quite a while, and we have a range bound condition here. We're coming back up into it after being oversold, and we will be watching this very closely. I'm going to show you some more slides on this here now. This chart you've seen before. This was constructed in August of 2021, and it shows this beautiful upward stride of the bull market going back to 2011. And this is a 3% scaling point and figure chart, very unusual. Takes some kind of advanced technique to be able to construct the counts on these. But I pointed out in August, which was really the important initial top in the market, that we had thrown over the top and had become overbought and fulfilled this count objective that goes from 2020 COVID low and test all the way back to the 2018 December low. So a very important event took place there. What has happened since? A distribution formed. This is a update of this chart that I did previously. You can see a top building, and also if we extend the channel, we can see here that it came out of the upward channel, upward stride, and broke down. What has happened since? And that is a distribution formed, and you can see the April, May, or the March, April peak counting across. This count, which is pretty large, counts down to 36.18. We hit 36.87 at the low on 6/17, which was a 24.5% decline, high to low, and it got within a mere 18 points of fulfilling the count of this distribution count. I think very interesting and important. So let's zoom in and look at the S&P point and figure here on a swing trading one box basis, just using standard arithmetic scaling, 50-point box size here. And this count takes us down. You can see distribution count fulfilled, redistribution count April to January fulfilled at 3,800 to 3,900. actually stopped there, attempted to rally, went down one more time and threw under that count objective. Now, this was into a climactic low, a very unruly decline in the S&P and the Nasdaq as institutions were basically window dressing, selling off stocks they did not want to have in their portfolio for the end of the second quarter reporting period. And so they basically threw these stocks overboard. And what we look for when we get a count fulfilled is there an attempt to come back into the count area. Exactly what has happened here. And so now we are hovering in this count zone, building a cause. We said back in May, June, we would need to see a low, a panic low, and a test and a cause to be able to determine the next move in the market. Is this accumulation? Very well could be, but it also could be redistribution. And we really won't know until we get pretty far into the completion of this causal structure that we're looking at here. So also we must keep in mind that we have a much bigger distributional count objective available. And this count takes us all the way down to 2950 to 3250. So there's something looming lower here that we need to always have in mind. And this is the reason we don't counsel trading in bear markets, especially trading long, because it's just such a difficult environment. And if people want to do this, and we just counsel, keep your stops tight, trade smaller, be super careful, protect capital. Don't trade with much of your capital either. So here is a triple Q count. You can see this is the 2020 advance off the COVID low. Beautiful stride formed here in the triple Qs. And note at the end, we did this chart in November. You can read it about it and see the analysis on this written blog from November 28th. And here is a throw over of the top of the channel and an attempt to turn back into the channel. We said that if the channel is breached, that there can be tremendous volatility between the top and the bottom. So what happened since? So we can see here a decline, a test of the top of the channel, a distribution forms, and then it falls right down out of the channel and then rides along it for a while and then starts to break down. So we can do a point and figure count, and this count takes us down to this 340 to 325 area, fulfilled that count objective in March. And what has happened since? We can see a much bigger count formed. And if we take this all the way across from the rally attempt to the high, this count takes us 265 to 230. We went to 268.76, still could get into the count objective range. That's why we have to always be careful. But this was in June, so this is like the internal low of the market, and could very well be constituted as a hit of this objective. And so we're going to watch and see how this trading range structure that we're in now is forming and how it will tip us off about what the market wants to do next. Here is the vertical chart of the triple Qs that we were just analyzing on that point figure. And you can see this is through July 15th. And here is our June low. This is a climactic low in the market right here. The May low was actually an internal breadth low, which I think is encouraging for the market wanting to go into a trading range and then even build a count for maybe a more important bear market rally. And so this is the reason we follow these markets, is because we want to keep our head in the game, even if we're being extremely defensive and just protecting capital. So here, this chart, study it, it's very interesting. These are notes that have been we have been taking throughout the whole distributional structure. So some of them apply to this area up here. Here's the Nasdaq 100. This is the index the triple Qs is based on. Here is a redistribution count from April back to January. This count goes down to an objective of 11,400 to 11,200, which is oversold at the bottom of the channel. and has fulfilled this count objective. And so this is what has happened since. Attempt to rally after this climactic low, which produces an oversold. And now we're going to watch to see whether or not a count can be formed for a more important move, something akin to what happened back here from March to January, when this was the best rally of the year back here in March, April. Here is an important breadth indicator, and this will be our last market chart of the day. This is the Nasdaq 100 underneath. This is the percent of stocks in the Nasdaq composite that are above their 50-day moving average. We use this as a measure of the breadth of the market, of the trends of these individual stocks. We look at the plurality of these trends, and we can see the internal low in May got below 7.5% of stocks above their 50-day. That means that on a short-term 50-day basis, they were almost all in downtrends, 92.5%, 93% in downtrends, which is dramatic oversold condition, actually. And then in June, at the climactic low, when these institutions are selling lots and lots of these growth stocks, we're actually getting higher lows in the percent of stocks below their 50. That is a bullish downside non-confirmation. And so this is very interesting. And then look at the state of the advance in this indicator as it works its way up above 40%. So this shows repair occurring underneath the surface in these individual stocks. And this is, again, further evidence of a downside non-confirmation. Here's the June climax low, tests in July, up we go, and we will see whether or not we can get an advance akin to the advance that we got in March. And then resistance is right up here, and we will look for whether or not a larger count can be formed. Okay, and then finally, oh, look at this mess. Okay, so here, this is the gasoline wholesale futures price. So futures trading, this, I'm going to go very fast, 2 reaccumulation counts on the way up in gasoline, tops out at our count objective of 430, had a range 430 to 480, had a climactic surge here. And also, if you look over here, you can see this accumulation count. You cannot see this count on the left chart. Same structure of the point figure. And look how it went right into the range of this reaccumulation count. This is called a stepping stone reaccumulation count. They confirm each other. Very, very useful. And so look where we are. 293 is how much the market is broken. I want to show you the vertical. And as we run out of time, and you can see this is a UTAD, we call this an upthrust after distribution that goes right into a climactic surge, which is into our point figure count objective. Then look at the gap and the failure back into the trading range structure. And here's the buying climax. This forms resistance. It came right back in and is falling towards the automatic reaction low. And with that, as much time as we have, and thank you so much for being here. We will see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.